Is success in trading a result of skill, or is it just an inflated ego playing with luck? It's a common misconception that trading is all about swagger and bravado, that it's a game for the arrogant. But this couldn't be further from the truth. Overconfidence can lead to reckless risks, while ego can blind us to our own downfalls. Instead, it's stoicism, the ability to remain calm and rational under pressure, that truly sets successful traders apart. Let's delve into a story that demonstrates the power of stoicism in the world of trading. Meet John Doe, a successful trader who embodies stoicism. John's trading journey is one marked by calmness and clear-headed decision-making, a testament to the power of a stoic attitude in the volatile world of trading. John's strategies are not driven by greed or fear, but by a deep understanding of the market and its nuances. He doesn't chase the next big thing, nor does he panic when the market takes a dip. Instead, he maintains his composure, making decisions based solely on facts and analysis, not emotions. There were instances when the market seemed to be against him. When others would have let their egos take the lead, making rash decisions, John remained unperturbed. He stuck to his strategy, his stoic nature, helping him navigate through the rough waters, and eventually he emerged successful. John's story is a clear demonstration of the power of stoicism and the dangers of ego in trading. So what can we learn from John's trading journey? The most crucial lesson is the significance of ego in trading. A successful trader is not driven by ego, but by rationality and objectivity. Emotional control is key. It allows us to make clear-headed decisions, especially when the stakes are high. The market doesn't care about our pride or our desires. It moves as it will. In the volatile world of trading, it is the stoic who often emerges victorious.